Hello everyone, I am presenting this video for FI BCom students. Subject is Financial Accounting. Chapter is Capital Reduction. Let's start. Theory of this chapter. See debit side. To profit and loss account, debit balance. This is a reserve. Next, to fictitious assets account. Fictitious assets includes preliminary expenses, debenture discount, and advertisement suspense account, etc. Next, to intangible assets account. Intangible assets includes goodwill, patents, trademark, copyright, etc. To fixed assets account. If there are given any kind of decrease in the amount of fixed assets like land, building, plant, machinery, furniture, etc., so it will be debited in the capital reduction account. Next, to current assets account. If there are given also decrease in the current assets like cash, debtors, investment, stock, etc. So it will be debited in the capital reduction account. Next, current liabilities. If there are given increase in the liabilities, so it will be debited in the capital reduction account. Next, to preference dividend account. Preference dividend is also debited in the capital reduction account. Next, expenses or claim account. If there are given any expenses, so it will be debited in the capital reduction account. Next, to capital reserve account. This is the answer of capital reserve, or we can call it difference of this account. See the credit side of this account. By equity share capital account, by preference share capital account. If there are given any decrease in the capitals like equity capital, preference capital, etc., so it will be credited in the capital reduction account. Next, by security premium. Next, by general reserve. Next, by profit and loss account, credit balance. These all three are reserves, so it will be credited or utilized in the credit side of the capital reduction account. Next, by current or fixed assets account. If there are given increase in the current or fixed assets, so it will be credited in the capital reduction account. Next, by current liabilities account. If current liabilities is decreased, so it will be credited in the capital reduction account. And last, by unpaid debenture interest account. Unpaid debenture interest or outstanding debenture interest is credited in the capital reduction account. Necessary journal entries. There are two journal entries. First, journal entry for preference dividend A. For making provision of preference dividend, so entry is capital reduction account debit to preference dividend account credit. And B, for the payment of preference dividend account debit to capital account or cash account credit. Next, second entry is journal entry for unpaid or outstanding debenture interest. A, for the payment of debenture interest, entry is unpaid debenture interest account debit to bank account credit. This entry is like expenses. B, if debenture interest is decided to forgo, so entry is unpaid debenture interest account debit to capital reduction account credit. Next, here is the sum. The balance sheet of Summit Limited as on 31st March 2018 is under liabilities and assets. So see liabilities, share capital 1006% cumulative preference shares of ₹100 each, 1 lakh. Next, 15,000 equity shares of ₹10 each, 1,50,000. Next, security premium 25,000. Next, creditors 60,000. Next, bills payable 10,000. See assets. Land and building 1 lakh, plant and machinery 1,25,000, goodwill 32,000, patents 18,000, stock 20,000, debtors 29,000, profit and loss 15,000, and preliminary expenses 6,000. Next, a scheme for reduction of capital was passed by the tribunal on the following terms: 1, 2, 3, 4, 5. These all are adjustments. So, first, the value of preference shares to be reduced to rupees 80 per share. Next, the value of equity shares to be reduced to rupees 3 per share. Rupees 3 is the new value of equity share capital. Next, the value of plant and machinery to be reduced up to rupees 65,000. 65,000 means this is the new value of plant and machinery, and plant and machinery is given in balance sheet. See credit asset side of plant and machinery 1,25,000 and new value is given 65,000. Fourth, the amount of security premium to be utilized in reducing the value of assets. Security premium means reserve. So if there are given any kind of information that utilize reserves, so if there are given information to utilize the all reserves, so we must have to utilize or credit all the reserves at the credit side of the capital reduction account. Next, the intangible assets to be written off. Also for fictitious and intangible assets, if there are given information or not, must have to compulsory debited or written off the all intangible or fictitious assets at the debit side of the capital reduction account. Fifth, one equity share of rupees 3 to be issued for each rupees 10 of preference dividend arrears which is in arrears for the last 4 years. There are given 4 years for calculating preference dividend. Draft journal entries and prepare balance sheet after reduction. Next, answer. This is the answer. Capital reduction account. First, we will prepare capital reduction account. So, see debit side, to profit and loss account, to goodwill account, to patents account, and to preliminary expenses account. These all 4 entries are fictitious assets and intangible assets. So it will be written off or debited to capital reduction account. Next, to preference dividend account rupees 7,200. See the calculation of preference dividend. 1 lakh preference capital into 6% is equal to 6,000. You can see in question. See 1,006% cumulative preference shares of rupees 100 each, rupees 1 lakh. So there are given 1 lakh amount and 6% for preference dividend. We have calculated preference dividend 1 lakh into 6% is equal to 6,000 and 6,000 into 4 years. There are also given years, 4 years in fifth numbers adjustment. So we have multiplied this 6,000 by 4 years. So our answer is 24,000. So see there are information given that one equity share of rupees 3 to be issued for each of rupees 10 of preference dividend. Means we have issued 3 rupees of equity capital in exchange of 10 of preference dividend. So we have to find out the amount of preference dividend. So 10,000 rupees 10 of preference dividend and rupees 3 of equity capital. So we have issued 3 in exchange of 10 of preference dividend. So what is about 24,000? So our answer is 7,200. So see, to preference dividend account 7,200. Next, To plant and machinery account 60,000. 60,000 means reduction. See adjustment number 3. The value of plant and machinery to be reduced up to rupees 65,000. 65,000 is a new value of plant and machinery, and total value is given plant and machinery 1,25,000. So 1,25,000 minus 65,000 new value. So 60,000 is the reduction price of our plant and machinery. See the credit side. So first, by equity share capital account 1,05,000. See adjustment number second. The value of equity shares to be reduced up to rupees 3. 3 means new price, and total price is given in balance sheet. See 15,000 equity shares of rupees 10 each. So 10 rupees is total amount of equity share, and new value for share is rupees 3. So reduction price for share is rupees 7. 10 minus 3. So and shares is 15,000. So we can get the reduction price 15,000 into 7, 1,05,000. Next, by preference share capital account 20,000, 1,000 into 20. So adjustment number 1. The value of preference shares to be reduced to rupees 80. 80 means new price, and total price of preference shares is rupees 100. So 100 minus 80 is equal to 20. So 1000 into 20 is equal to 20,000. Next, by security premium account 25,000. If there are given information or not to utilize reserve, we must have to compulsory credited all reserves, or we must have to utilize all reserves at the credit side of the capital reduction. So after all, make total of the credit side and deduct all entries of debit side, and so deduct all debit side from the total of credit side. So we'll get 11,800 our answer, capital reserve. Next, journal entries. There are 5 journal entries. First, capital reduction account debit to profit and loss account 15,000, to goodwill account 32,000, to patents account 18,000, and to preliminary expenses account 6,000. Second, security premium account debit to capital reduction account credit 25,000. Third, equity share capital account debit 1,05,000. Preference share capital account debit 20,000 to capital reduction account credit 1,25,000. Fourth, capital reduction account debit 7,200 to preference dividend account 7,200. And fifth, preference dividend account debit 7,200 to equity share capital, because we have issued new equity capital for preference dividend payment. Next, balance sheet. See liabilities. Preference share capital total amount is rupees 1 lakh. See in old balance sheet rupees 1 lakh, and reduction price of preference capital is rupees 20,000. So net amount of preference capital is rupees 80,000. Next, equity capital. See old value of equity capital 1,50,000, and reduction price is 1,05,000. So 1,50,000 minus 1,05,000 plus 7,200. Because we have issued new equity capital, so it will be added in equity capital. So net amount is 52,200. Next, creditors. There are no changes in the amount of creditors, so it will remain same. Balance sheet, bills payable. Also, there are no changes in bills payable. And last, capital reserve. Capital reserve is our liability, so we have to consider in our balance sheet. Land and building 1 lakh. There are no changes in land and building, so it will remain same as old balance sheet, 1 lakh rupees. So plant and machinery 65,000. 65,000 means see, total value of plant and machinery is given 1,25,000 and reduction price of plant and machinery is rupees 60,000. So 1,25,000 minus 60,000 reduction is equal to 65,000. Next, stock. There are no changes in the amount of stock, so it will remain same. And last, debtors. Also, there are no changes in the amount of debtors, so it will also remain same, 29,000. After that, make total of both sides, liabilities and assets, and make sure that your total should be equal of both sides. Thank you.